Are you ready to move into creative financing strategies and know exactly where that funding is coming from for your next property? Well, if you need help with that, today is the episode you definitely want to listen into. So, hi, I am Becky Nova, the founder of Lady Landlords. Thank you for joining me for today's episode of the Lady Landlords podcast. Today, I want to talk all about how we can actually shift our mindset a little bit, and that's going to help you be able to find the funding that you've wanted to find for your next deal. So, I was thinking about this because in the Lady Landlords Facebook group, I see all the time people asking, how are you getting funding? Where are you getting funding from? Where are people coming up with the money for all of these deals, especially when we're doing multiple deals in the same year? And I want to tell you that there's actually a ton of ways that you might actually be sitting on more money than you thought, and you actually are ready to go for that next deal that you have been wanting to purchase. So let's jump into what some of those options are for you. So, one thing that I think a lot of people don't think about using is the assets that they already currently have. So I feel like all the time we're looking for people on the outside to say, well, can this person fund my deal? Can I be able to find a lender? Who's going to give me the financing? Yet sometimes we actually already have it ourselves. So in this situation, I want you to encourage you to think of the assets that you already have that are already performing for you and see what we could do to leverage them. Now, when we talk about the idea of leverage, do know that that is really an individual thing on what you feel comfortable leveraging and how much you really feel comfortable leveraging. But in real estate investing, when you are at that level where you are really growing your portfolio and really looking for the next step, this is kind of a no-brainer of a way where you can be able to use the equity from properties you already have to be able to move forward. And listen, it doesn't even necessarily need to be other rental properties that you already have, but it could actually be your own primary residence that has the cash that you need to be able to even get that first rental deal that you're looking for. So, two of the most popular ways to be able to do that is looking at something that's either a line of credit or a cash out refinance. So, let's break those down. First, let's start with your line of credits. So, a very popular way to be able to get equity out of your current property, and once again, that could be a primary residence or an investment property, is to use a line of credit. If you're talking about doing that on your primary residence, that would be something known as a HELOC, your home equity line of credit, or an investment property, which would then just be a line of credit. This is a great way to really turn your property into kind of your ATM machine. It's a great way to be able to get the money out. That's something that also you will have the information of then how much money you can take out of your property. And then you don't actually have to use all of that. That's where you can really pick and choose the amount of money that you will need to take out of your current property and use that line of credit to now be able to then get you that next property. It's really a great system. What's great about HELOCs and line of credits is it's usually something that you can control how much money you actually use from it. And then because of that, there tends to be a little less fees than your second option, which is a cash out refinance. When we talk about using your cash out refinances, I know this is something really popular right now because interest rates are going to be going up. So if you've been thinking about refinancing a current property, investment property, your own home, now is the time to really get serious because interest rates are not going to be the same in a few months as what they are now. And we've really been at historic lows for the past couple of years. So if this is something that you've been considering and going back and forth with, now is your time to really get on the phone, call up your mortgage broker, call up your lender, and really ask about your options for that refinance. But if you're going to do a refinance and pay those closing costs again and basically kind of reset that mortgage, why not see if you can pull equity out and do a cash out refinance? And what that's going to do is that should be able to get you then a lump sum of money, which then you can put towards another property. So with both of those two strategies, what you're really looking for is to be able to use the capital from what you already own to be able to now get another property. The most important thing there, and the one caveat with leveraging those properties, is you have to make sure that you are calculating in any types of fees or what your new payments are going to be from that line of credit, from that cash out refinance, and what your new mortgage payment is going to be. You want to make sure that then the new property that you're buying still has a high enough cash flow to cover that cost of money of what you're going to be taking out. But right there, you probably already have money that you're sitting on that you weren't even thinking about. So that's a great way to really get that money back into action. A second idea of what you can do to actually turn yourself into your own bank would be to look at some other places where you may have some cash. Now, this might be either looking at your self directed IRAs, maybe you're looking at your whole life policies, but really you want to go back and look at whatever else that you have that has a cash value to it. Now, for example, with insurance policies, you have term and you have whole life policies to really get us down to some basics here. Usually, with term, it's a couple bucks that you're usually looking to pay a month. It's really affordable and you can get a very large policy. Usually, with term insurance, though, the reason it's called term is it's because it's only for a certain period of time. When you're using then term insurance, you really are making sure to protect your family, your loved ones, in case something happens to you, that then there will be that death benefit that will be paid out to your family to cover expenses. That's incredibly important. And I really encourage everyone to make sure that they do have term insurance for that purpose. But whole life is another financial tool that you can use. Now, there are different benefits and also some cons to whole life. For example, whole life does tend to cost quite a bit more than your term insurance is going to be. But you can use this vehicle in so many different ways. And one of the great ways to be able to use it is actually to use it for real estate investing. Just as much as you can use whole life, you can also use your self directed IRA, which is another investment strategy where you're putting money into an account, which then the idea is that that will grow over time because it'll be invested. But you can actually borrow against your own money. That's where you're turning yourself into a bank. So instead of necessarily having to go out and find a lender or somebody else that's going to give you that money, well, you might actually already be sitting on some money there. So, what you want to make sure to do is look at some of those other buckets that you've been saving money and putting money in different places and see what you can do to be able to borrow against those different policies and use that money yourself. Honestly, I would rather pay myself back than to be paying anybody else back, anyways. So, this could be a really good strategy for you to be able to use. Now, I know there's still some people that are listening to this saying, but Becky, I don't have any of those things. I'm just starting out. Maybe you just got out of debt. Maybe you just went through a divorce and your retirement or some of these other investment accounts are low right now because of some of your personal situations. Well, just as much as we're going to talk about turning yourself into a bank, I want to encourage you to think about other people also as banks, not necessarily going and finding those large financial institutions, but really thinking about individuals as a bank. Maybe you are young and you have not been able to set up some of these accounts that I just named or able to do some of the different strategies that I just mentioned, but I bet you know other people that have done those things. And because of that, if we start having conversations with other people that have those funds, maybe they're not the people that necessarily know where to put those. Maybe they don't want to be real estate investors. They don't want to be landlords. They don't want to deal with all of the things that we necessarily have decided we're going to take on as our own investment platform. But they still want returns. They still want to be able to make money more than what the interest you're getting from just sitting in what's considered the high yield savings account. I think right now, high yield savings accounts give you like a half a point in interest. I mean, people are really looking for other ways besides just sitting in a bank account and a savings account, hoping that that will even cover inflation, because that's absolutely not. So, other people are absolutely willing to bet on you. They're willing to bet on you because you're going to be running a profitable business, because that's what real estate investing can be. And you now are the CEO of your real estate investing portfolio. So, it's a great opportunity to have some conversations with friends, family, partners, coworkers, other people that you can think about that are in a situation where they would like to invest money, but they're not quite sure where. And they don't feel comfortable with some of the more traditional strategies, or maybe they've kind of tapped out on that. So, this is where you absolutely have the opportunity to create a private lending funnel. This is a place where you can actually be using other people in your life as your bank. So that will actually help you kickstart yourself into becoming your own bank. So I really hope that these tips today helped you change your mindset a little bit compared to what our traditional thinking is. Usually with lending, the first thing people do is, well, I got to go get approved for a mortgage. So I got to go through paperwork. I need to have that W-2 job. I need to have a ton of money in the bank. I need to have a great credit score. And yes, there are definitely ways to build a portfolio from just thinking in that traditional sense. But I really want to encourage you to think about all those different strategies out there that people are building successful real estate portfolios. But we just have to change our thinking a little bit from where we've been to really be able to see greater success. And I was thinking about this a little bit earlier today. I'm actually recording this podcast episode on Valentine's Day. And one of my favorite pictures of my husband and I is where we got engaged. We actually got engaged on the Great Wall of China back in 2018. Yes, 2018. So when we got engaged, I remember going to the Great Wall of China and I had no idea what was going on. I was not expecting absolutely anything. But we got to the Great Wall of China. We'd already been in China for a couple days. And one thing that I definitely did not think about when I booked that trip was the fact that I booked that trip to China in January. Now, if you couldn't tell by the Winter Olympics, Beijing is really cold during January. So we went and we were wearing like multiple layers of clothing. We had like those little packets of like hand warmers. And I'm telling you, I had them stuffed in between like all of my clothes, my multiple layers of pants, my socks, everything. Because the day we went to the Great Wall of China, it was actually -7 degrees, literally freezing. But we got there and our tour guide says to us, hey, you guys have, I forget what it was, 45 minutes to go explore. You kind of have two paths. You can either walk down here to the left on the Great Wall of China. And if you take the left path, listen, it's nice and easy. It's going to be like a stroll. It's really flat. It's really easy to walk on. It's one of like the more simple places to walk on the Great Wall of China. You are going to run into a bunch of other tourists because that's where everybody kind of goes to just take pictures. They get off the bus, they go take pictures over there, and they get back on the bus. Pretty standard. Or he said, you guys can go to the right. If you go to the right, listen, there's parts of the walls that are going to be crumbling. It's really steep. You got to watch your footing and make sure that none of the stones are kind of loose so you don't fall. But you're going to have a much better time being able to see what the views are up there. So it's kind of like you can take that risk and see if you can make it up all those hills and get to some of those towers there. But you're going to be absolutely rewarded with the views that you're going to see on top. Or you can go the rest of the path and go like everybody else and just walk down the flat path. And I got to say, both my husband and I decided that we were going for that more difficult route. We wanted to go that steep route. We wanted to get that reward. We wanted to see those views that not everybody else got to see. And I share that story because I feel like that relates so much to real estate investing. It's the same thing here when talking about financing. We can sit there and say, great, I have to save up my down payment and I have to wait till I have 20, 30, $50,000 in the bank. And that's going to take me a good couple years, maybe a decade to be able to get. And I got to improve my credit score. And I got to remember that this is what I want to do, even though I'm going to have this delayed gratification where I can't buy another property for more and more years. I'm going to have to stay at that dead end job and work that 9 to 5 schedule and stay in corporate America until that point in time. Well, listen, that was all the people that went to the left. That was all the people that said, let me take the easy way. Let me go. Let me take my selfie. And let me get back on the warm bus. And listen, there's nothing wrong with that. But if you're listening to this podcast, if you're a member of the Lady Landlords Facebook group, that is because you are choosing to go a different route. You have already chosen to go to the path to the right. You've already chosen that you want to take that risk and you want to climb that steep hill and you know it's not going to be easy, but you're willing to take that climb. And the reason you're going to do that is because you know that there's financial freedom on the top. You know that it is up there. And listen, we might just have to be a little bit more comfortable thinking outside of the box. And we're going to be the people that sometimes have to do a little bit differently. And honestly, it is the people that can get creative, the people that can get out of their comfort zone and get out of their own way that are successful in this business. So I want you to think about if you want to take that path to the left or that path to the right when you are now thinking about the next way that you are going to fund your deal. So I hope that inspired a couple of you today. Feel free to subscribe to our episode if you're either watching live on YouTube or if you are listening to the sound wherever it is that you subscribe to podcasts. Make sure to be able to subscribe to the Lady Landlords podcast so you do not miss our episodes that come out new every single Tuesday. And feel free to reach out to me if you need any help putting some of these finance pieces into place. I'm always available. You can find me either through email in the Lady Landlords Facebook group, and you can always reach out to me on Instagram at Becky Nova 24. Otherwise, I will see you next week on Tuesday for the next episode of the Lady Landlords podcast.